In today's video, I'm going to be sharing with you my new favorite entry model for market maker buy and sell models. I'm going to be talking about how you can spot this, why I think this is one of the best entry models for playing market maker buy or sell models. And also at the end, I will give you some live examples on the chart so you know how you can enter with this type of entry model. So make sure to stick to the end of this video because you really don't want to miss anything. With that being said, let's get right into it. So we all know that fair value gaps are our best friend for entering trades, right? We see a market structure shift, we spot the fair value gap, and we just enter once price touches that fair value gap. And this is an amazing entry model. Like, I still use it every single day, but recently I came across another type of entry model which I really begin to like, and it's called the FOD, or failure of displacement, and especially in the re-accumulation of the market maker buy model or the redistribution of the market maker sell model. And before you say what the does this even mean? Well, don't worry, because I'm gonna explain you everything in this video. But before you're gonna watch, I highly recommend to watch my previous market maker buy or sell model video, because I'm not gonna explain you the entire model again. So after watching this, you can go back to this video. So after you watch that video, you probably by now understand that with a market maker buy model, we need that original consolidation, and especially this strong pivot point of some kind of key level. And so if you enter off this fair value gap right here, if we have a very good market structure shift, a really good displacement upwards, a very strong reaction, then you can enter off one of these fair value gap that's probably being created right here. But in my opinion, this is a risky setup, because actually it's not really confirmed that this market maker buy model is actually indeed a market maker buy model, because we can still use this high just as a manipulation before going lower. So that's why I like to play a second entry. I want to see a first key level getting respected. In this case, I want to see this fair value gap or order block, whatever equilibrium, getting respected, so I know that we are back inside this range, and this is a pivot, this is a consolidation. Now this market maker buy model is confirmed. The same for a market maker sell model. I want to see a strong reaction from here, an original consolidation, and I want to see the first entry getting respected, because this builds confidence, conviction in this model. So a safer entry for me personally would be to enter somewhere in the middle of this last curve once we are coming closer towards our target, which is the original consolidation. So these equal highs or the equal lows on a sell model. So now you can base your second entry of the same thing, like a fair value gap or an order block. You can just play this and still target the original liquidity, right? In a sell model, you can just also wait for just some fair value gap to retrace and then target the original consolidation. This is perfectly fine. You just wait for another fair value gap or another block or equilibrium to getting retraced to then just enter and target this original consolidation. But this mostly offers not a great RR, because if you, for example, gonna short this, you enter right here and your stop loss is right here, and then look at this, this is not really a great R, right? Also in a buy model, if you enter somewhere right here, and I don't know where you're gonna put your stop, but this can actually still get mitigated, so you have to put your stop somewhere here, because this is the invalidation and this doesn't offer that great of a risk to reward. So how do we enter in this case? Well, so thanks to Casper SMC, because he introduced me into this failure of displacement entry model, but also actually thanks to ICT, because he said it himself, he likes to catch that last expansion move after the re-accumulation of the market maker buy model or the redistribution of the market maker sell model. So how does this failure of displacement entry model look like? So basically you want to wait, like I said, for the re-accumulation or the redistribution. The re-accumulation is this of the market maker buy model, and the redistribution is this of the market maker sell model. And so why I'm saying re-accumulation and redistribution and not just a accumulation or distribution is because mostly you have another accumulation or distribution just lower here or higher right here, but actually the best ones where this failure of displacement entry model works best is once this consolidation is actually very close towards the final target, because like I said, ICT said it himself that the last consolidation offers the best trades and it has the most explosive momentum towards this final target. So what do we want to see inside this consolidation or reaccumulation in this case, right? We want to see a low getting formed, and then we want to see price sweeping that low or just manipulating below the range low of this consolidation, and then we want a bullish candle right back inside this range, indicating that this is a failure of displacement, right? We don't just push with a lot of momentum down. No, we just manipulate, failure to displace, and then we close the next candle bullish towards our trial on liquidity. The same thing if we are talking about a sell model. We want to see a manipulation above a high that is getting formed on the redistribution of the sell model. We don't want to see a displacement. We clearly want to see a failure to displace, a manipulation, whatever you want to call it, and then you want to see a bearish candle back inside this range, back inside this redistribution zone that is indicating that this was just a manipulation. And so once you see that bearish candle, you can market enter right there with your stop very tight at this manipulation high and your target at the original consolidation. The same goes for a buy model. You want to see a manipulation right here. Once one of these lows gets swept of this consolidation and we have a bullish candle, we want to market enter when that candle is closed. This is very important. You really don't want to enter if a candle is not closed yet, because this can just be another manipulation to then go lower. So you want to play off formed candles. I'm using this on the minute 5 or minute 15 time frame, but really this just works everywhere. Price is fractal, so you can see everything on every time frame, but of course the higher time frame holds the higher power. So once you see that bullish candle close right here, after a sweep, after a manipulation, after a failure to displace, you want to market enter at the close of that bullish candle, put your stop below that low, and then target the original liquidity, which is the equal highs on the original consolidation. So you see that this actually offers a great risk to reward. Oops, I accidentally made this a short. Of course, this has to be a long, but as you can see, if you play with this setup, you have a 3.8 R, and if you just use the first entry, which is a high risk entry in my opinion, then you see that this risk to reward is 2.52, but this one is 3.8, but this is closer to the drawn liquidity. So this offers a better RR, is safer in my opinion. Why this is also safe? Because you might think, well, this is a really risky stop loss. Yes, maybe it is, but you will have more winners than losers with this. And also because a lot of people, they just see this as a beautiful short. They market short right here once they see this breakdown, because they see like a fair value gap is getting respected, the supply zone, whatever, and basically our take profit is at their stop loss, right? Because they don't see this whole model. They just see a high fair value gap, a supply zone, and they want to short because they see some market structure shift, but it's not confirmed because it's not a displacement. If they saw this, then this is a valid setup, but if they see just a manipulation, then they will probably get stopped out. But we see this entire model and we enter right there after the candle close of the manipulation. So I think you might have an idea of how this can work, but let's make it clear on the chart. I will give you 3 examples right now. So here we are on the minute 5 time frame on Euro USD. Basically, let's go to the higher time frame. What do we see right here? Okay, this is looking very bullish. I don't want to short anything here because we swept this range low, we displaced back into it. So let's look for longs, right? I can immediately spot a market maker buy model right here because I think we have our pivot right here. We swept this range low and we made a push upward. So this can be the pivot zone of the market maker buy model. So we also need to have an original consolidation. So I might take this as the final target, so as the original consolidation. What do we see right here? We don't have a market maker buy model confirmed because we want to see this getting back inside the range, and then we want to finally target this trial on liquidity. So let's play price further, and what do we see right here? Okay, we get back inside the range. This was a valid pivot level. I think this is the next trial on liquidity, because for me now this is confirmed that this is a market maker buy model. Now a lot of people, they might see this fair value gap right here and they see the supply zone right here, but they don't realize that we can maybe be in a market maker buy model. So what do we need to do right now? We talked about this. We want to see a consolidation and then the manipulation where we have our setup, right? So of course this is very clean to see. In the live markets it's much more difficult. So let's just go back on the minute 5 time frame and let's look for a potential manipulation inside a consolidation. Okay, so this is what you want to see. We are inside this liquidity pool. We are starting to consolidate. So now let's look for a low, and then we want to see a failure of displace of that low. Okay, do you guys see this? I think on the minute 15 is clear. We bounce off this order block, this fair value gap, and we see we had this low right here, this low, and we basically failed to displace, right? We swept it and immediately a bullish candle. This is what I was talking about. So let's put a long right here on the candle close, and then our stop right there, and our final target at the high of the original consolidation. And as you can see, this was a beautiful trade, a little bit risky. Let's see if it hits our final take profit. Yes. So this is a 6.09 R trade. So beautiful R. You can see that actually we could have had another entry if we took this failure of displace low, right? This is also still inside the consolidation, and we basically failed to displace below this minute 5 low. We swept it and immediately a bullish candle right there. So you could actually also put a long right here, stop loss right here, and this was just an amazing setup also. So this is a very clean examples. We are in that market maker buy model. We have our strong pivot. Why is this a pivot? Because look, we swept this high and immediately we come back. That's telling to me that this is the pivot of the market maker buy model, and we are inside that fair value gap supply zone. A lot of people started shorting after they see some bearish momentum, but we wait for a manipulation and then an entry to target the original consolidation of this buy model. Now let's go to another example. This is also on Euro USD on the minute 15 time frame. Here I can also see that we have a sweep of this low. So that's really nice to see at a pivot zone. So we swept some lows right there on the higher time frame. We are looking a little bit bullish, right? Higher lows, higher lows, higher lows. We swept this low. So I think it's good to have a bullish bias. So we just swept these lows. We have a strong reaction after another sweep of the low. So a stop rate. And I think these are nice highs that we can target. This is a potential distribution, and this is maybe the original consolidation. So what do we want to see? Again, this is a buy model, so we want to see a consolidation somewhere in the middle if this model is confirmed. So I want to see at least a break of structure right there. So we have that right here. Okay, so I think this buy model is confirmed right now. Let's see if we get some consolidation going. Okay, so this is beautiful, guys. This is really what you want to see. We have some consolidation. Everyone wants to start shorting, of course, because they see this kind of order block area consolidation where we can potentially short from. But this is our final draw on liquidity. We have a pivot right here. We are inside that supply zone where everyone is bearish, but we want to see a manipulation below a low in this re-accumulation of this market maker buy model. So now I see that this is a potential minute 5 low. Let's see what happens. Okay, look at this. A lot of people, they were bearish once they saw this drop, but we see this as a manipulation because the candle, the minute 5 candle, it closed bullish above this low. So this doesn't look that bearish at all, right? We want a market enter right when that bullish close above this low happens. We want to put our stop right there and target the original consolidation, which is right here. So this looks like a really risky setup. I also thought it in the beginning, but look at how this will play out. This is just like you see a skyrocket towards that final draw on liquidity. We first front run it, but we just retrace a little bit afterwards. Let's see if the final draw is met. You see, this is really the draw on liquidity, a beautiful trade, a 10R on this trade. And you can even scale in this position after you see this fair value gap getting entered, put your stop to break even, whatever, but you see that this can offer some really nice setups. So now we talked about 2 long positions. So now in the last example, I'll show you an example of how you can go short. So what do we see right here? A lot of rejection after sweeping this high right here. We are in a bearish market, I think. Yes, we are in a bearish market. We don't want to long anything right here, just following the order flow. And let's see what we need. Okay, we have our pivot point. This is basically a high and an order block. We reject off here, and now we want to see an original consolidation, which is very clean right here. We have a consolidation, we have that liquidity. This is the draw for the trade, and basically we want to see a redistribution right now and then target this final liquidity. So let's go and scale down to the lower time frame. This is the minute 5 time frame. Okay, we have a very huge sell-off, so let's see if we can see a consolidation. Yes, beautiful. This is just textbook example. Let's see if we get a failure to displace. Now this is really hard to spot, but basically we have a high right here. This is a high, and with the next candle we basically sweep it, and the next candle is bearish. So actually this is a potential short. We market enter right there after we see this high. So a high for me is basically a bullish candle and then a bearish candle. So this is a high, we sweep it, and the next candle is a bearish candle back inside that consolidation. So your stop is very close right there, target at the original consolidation, and basically you can see that this can also play out very nice. You see, this is why ICT called this the very explosive move, a very nice setup, because this is with a lot of momentum and usually plays out very well. Now you might ask, why don't you use this high right here, this high, and then this is a failure to displace? Because we sweep that high, right? But we don't have a bearish candle afterwards, right? The next candle is also bullish. So you really want to see a sweep of some kind of high right here and then a bearish close. And as you can see, a beautiful 4R. There was no first entry, so the second entry was the only trade you could have taken. So I think by now you understand what I mean. I hope you learned anything from this video. If so, I would really appreciate a like and a subscribe. I wish you guys an amazing rest of your day, and I'll see you guys in the next one. Peace out.